Okay, hi everybody. I'm going to, Fausto was all about stocks. He was great, and I am all about the futures market. In fact, today what I'm going to do is, since we have a short period of time, I'm going to kind of take you through how I look at particular commodities and how I go into my trades, what I do before, what I do after. So if you'd like to take a look at it, let's take a look at as many of these futures charts as you'd like, and we'll go through my opinion of direction based on how I approach the market in the morning. So if you're a futures trader and you have a a futures contract you'd like me to look at, one that you're trading, I'm going to do this really with a bent also toward prop trading. There's my first one, gold. Let's take a look at gold. Prop trading is something that you probably have heard of. If you haven't already, it's all about trading somebody else's money and getting 90% of the profit. So it can be attractive, but it's not an easy thing to do. You have to think and act like a professional trader. All right, and I'm going to give you some tips on that in case you are prop trading. And right in the middle, I want to, the mental part is really my true love, besides the books that I've written on trading plans and so on, and industry papers on that topic. But it is the mental and emotional part, I think, that separates the winners and the losers. Okay, here's a 5-minute. Let's go. The first thing I do when and I've been trading a lot of gold and silver. In fact, I'm dealing with the gold silver ratio, which is pretty interesting, but that's for another time. Let's look at the daily chart of, I'm gonna move, let me reduce this down to that. Okay. What you're looking at, of course, is the chart in gold. I don't think when I have my my chat box up here, I don't see. I can look at copper. Copper's been great too. Okay, here's gold. Here's what I look at. I look at the daily chart first. And why do I look at the daily chart as a prop trader? And really as any trader, you want to get what I call the undertow. You want to see the general direction of a chart, so that when you go to the lower time frame, if you're trading the 2, the 5, the 10, whatever lower time frame you're trading, you're going to be influenced primarily by the daily chart. There are a lot of swing traders, long-term traders, or at least short long-term traders that look at the daily chart. A lot of people use it as a reference, and therefore they'll have a tendency to trade according to that, as we will also, because it's an undertow. So any longer term chart is always an undertow for the shorter term chart. I can give you the science behind that at some other time, but understand that I always look for, and these are edges. You see, profitable trading, whether it is in prop trading or trading your own retail account, it's really a matter of gathering the edges, gathering the positive edges to give you that, to lift your performance from 61% to 62 or 63%. And another edge may make it 64% winners. So these edges add up. And this is one edge, the area of undertow. Okay, here's the gold. I mean, you can't say much more about it, as this thing looks hot. The only drawback may be its relationship to silver, which it's at a very high point as far as its worth compared to silver. And so when I trade the spread, I'm looking for a difference in that. In any event, in looking at this particular, I mean, look at it. You're seeing a beautiful chart. You're seeing a nice correction, accumulation, and now take off. Now, in general, actually, when I look at a chart like this and I see accumulation here, a good trader anticipates what they're going to get out of a trade. They're looking for so in this particular case, if you're looking at the daily chart, you're looking at an accumulation here, and you can measure this accumulation. And if you put a pin here and a pencil here and swing it up, you're going to see that we're a little bit away from what I would expect to. So if you take this horizontal distance and make it vertical. That's really what you're doing. That can give you a pretty good anticipation of where this next move can be. You know, there are a number of measures that I'm looking at in my head that I'm not going to talk about that are arriving in the same place. We're fairly close to what I believe will be a stop and an accumulation, because if you take this particular distance and you apply it here toward where at the breakout point. Now this is the 8-bar exponential moving average, which I really like. This is not important at this. This is something that I use for defensive purposes, keeps me another moving average. But for this explanation, you know, when we stay above the 8-bar exponential moving average, it means that you've got a very nice steady trend. And that's exactly what's happening here. So I don't expect a reversal here. I expect some continuation with a movement toward the right. In other words, accumulation similar to this, and it may be violent as it makes a new high, as it does here, corrects and then fights with that high and goes higher. So I'm big on trends, and you should be too. When you really don't want to fight a trend, you're much better off looking for triggers that are continuations of a trend. This would be one that we would have advised. This is another that we would have advised as far as continuing a trend. So you're better off looking for spots to continue a trend than reversal. Look, everybody looks for that reversal because they're looking for all of it. You're better off taking larger positions with high probability, some of its. Okay, so here is so I'm looking here, and what this is telling me is I'm not getting much. I'm not, what I'm looking for is whether I'm favoring the long side or the short side. So I'm favoring slightly the long side based on this daily chart, but not really enough of an edge. Let's take a look at the 5-minute. Here is a market that's been coming down since the middle of the night, since we have a slight bias toward the upside, wouldn't result in what it usually results in with me, and that is looking at my position sizing. I'm taking the same signals that I always take, whether it's short or long. I'm going to take short or long signals, but I will favor the longer signals in a position sizing way. So here in the daily, you can see how nicely we're running around this 8-bar exponential moving average. You know, I always look for two. You're wondering if this is going to turn. One thing that I like to do is I like to look for two consecutive closes over the 8 to make me believe that we're going to reverse that. And even though you have this action here, look, one above here, but they're not consecutive. You see, now here's two consecutives, and we have a way of staying in this trade, anticipating a continuation of the downtrend. But what I'm saying is that there are techniques to give you edges. In this particular case, in the daily chart, I'd be looking for a reason to go long. And this is a pretty good reason to go long right here. This formation, when you have an engulfing pattern that crosses the golden mean, the 8, this is something that I would look for, at least a test of the recent highs, and that would be here. And we really got it. Listen, when you're looking for a test of the high, you're not going to take these prices up here and say, this is what I want. What you want is you want to look at the bodies, and you want to take some off those bodies, and so that you're more sure to get the scalp. Yes, it's less, but the less you ask from a market, the more you're likely to be successful in what you're asking for. So in this particular market, I would be, if I took this, I would be looking for just a short run to right below here, and I may very well have gotten my scalp right here. Now, I have an email coming out after this presentation that talks about the importance of limits when you're prop trading. When you're prop trading, it's really important to use limits. Why? Because in prop trading, they have what they call the red line, that red line that follows you, so that if you continue to lose open trade equity, they count open trade equity against you. And so if you have a $500, if you have a $500 positive open trade equity in your account, and you let it go back to break even, that $500 is counted against you. And instead of that red line, and you people that have inspected prop trading know, instead of that red line, which starts out, say, at a $50,000 account at 2,500, I know I'm giving you a lot of numbers. Instead of that red line being $2,500 away, where you blow out the account, now it's only 2,000 away because you've let go of $500 in open trade equity. So when you use limits, and even though this is a short take, that $300 or whatever it is here would have padded your distance. So instead of 2,000, you would have had 2,300 if the line started at 2,000. So you're looking to pad your distance. So I'm always looking at that. Besides being having the head of a professional trader, okay, you can see that this is going to continue. Also, I always take at least two contracts when I take a trigger. One for the scalp, for the padding, and another for what I call more glorious profits. Okay, so and I can show you how to manage that on the way up. But this look, gold looks like it's going a little bit higher, at least in the short term, but I wouldn't expect it to go much more than another $30 or $40 higher. Okay, what other? Let's look at copper. That's it. I want to show you one thing just before I look at copper, and that's this. You know, I mentioned the mental game. If you, David, would put the link in for the Disciplined Trader / Excel. This is and I have the explanation here of the deal that I'm giving for this Analyze Your Trade attendees, for all of you that are attending. This is a $997 course it's just terrific. It's a live course that we gave on the mental and emotional aspects of trading, turning that revenge trading around, the lack of patience, anything that you're dealing with. But we're not doing it this year. So I'm offering you the recordings of this 5-week extravaganza. It's actually simpler than you think, but 5 weeks. Here's some testimonials. But right here, if you instead of 997, you can get the recording if you use the coupon code Feb11th for $197. So I want you to be disciplined. This is one of our best courses to do that. You can pick and choose from the course. You can just take it like everybody else, but you'll get the full recordings, not for 997, but for 197. So use the coupon code Feb11. When you go to the link that's posted here, you'll come to this page, so you really don't have to remember the code. It'll be there for you. Let's look at copper. Copper is something that has been in the news primarily because of the tariffs. Yesterday was a huge move in the upward direction when the tariffs were named on steel and etc., but includes all metals, a lot of metals, I'm sure, including copper, it seems, because yesterday in anticipation of the tariffs, and then yesterday, another huge day. Well, today we're getting a corrective day. I'm not sure there's a reason for it that you can find in the news. I kind of looked at it. I thought maybe he was backpedaling on the tariffs, and that was the reason here. But I think it's more of a technical reason. So here is, again, the daily chart that I look at, okay? If I were looking at the daily chart here, I would, because of, again, I'm not looking so much right here at the, well, I am, but for a different reason. I'm just going to remove this. Again, it's a defensive moving average that we use, but I want you to concentrate on the 8 here in these examples. Here is a situation where copper is in a very strong uptrend in the last week and a half. But you got to be a little careful here because we're seeing some tops here. These are near all-time highs here. I mean, we've gotten a little bit higher, but the 530 or so. But this 450 area, and even this more recent high are going to be resistance areas. Okay, as you've seen, they resisted here, and now we're moving higher. So from a day trading standpoint, again, I'm not getting the edge that I want, other than this thing could go both ways. Okay. It's more likely probably to move a little higher here, and if this corrective movement is exhausted, you know, I like to draw other lines that could be influential, like this recent high here. Could be something. I think looks like I asked for the wrong This is a better line to look at, this horizontal line here. So you can see that this is an area where we've already hit. And so we may be some up. So in looking at the daily, I'm not getting much in the way of helping with direction on the shorter term chart. So here's the shorter term chart. You can see a lot of the movement in that long red line that we see today. But I would be looking for a turn to the upside. We had one here. This is one of our loaded gun signals. Here's another one on the short side. So these loaded gun signals are very accurate when used properly, and that's what we do with our loaded gun simple trading plan. But I think today I want you to be more focused on the mental side. And when you're looking at the mental part of trading, you want the edges. And when I'm describing to you by looking at the daily, before you take a look at the shorter term charts is a very big edge. And the way I would utilize that is here's something right here where I look at, you have momentum here in the RSI that's moving higher. However, even though we have a more motivation here to go higher, the price is really not happening. There seems to be a fight here. So the continuation of this recent short-term trend in the daily chart is probably an area that we want to respect. So I would be be very happy to take a short trade in this environment. I use the RSI not necessarily to put me in trades, but to anticipate trades and to help me sometimes with, again, position sizing, which is, again, I believe very important. But here's an area where I would expect some problem getting through on the upside. So if we did take this signal, we would be having our scalps, as I mentioned right here, to pad our distance from the red line, and we would have been better for it. It's easy to say when you see what's happened, but I think I've explained enough to show you that this is what I would have done, and this would have been, if you had done it with me, you would have done very well here. In any event, so you'd be out of the trade here, or you would be in the second trade that I would be looking at, going longer, to go long, looking for more out of it. In other words, when I take a trade, I always take at least two positions. When I take that position, I use one as a scalp in the appropriate place, as I've shown you this measure, and one to continue on higher. If we get two closes here below the red, I would be out of this trade that was entered here. So it looks like we're coming close to that. We've got about 3 minutes left. All right, let's take a look at some other charts. So, that's my feeling about copper. Anybody else have I have the loaded gun strategy. Wilbur, excellent. Yes, how are you, Wilbur? I'm glad to say some good things about it, please. And Excel, I think, William, you also have our Excel. You may have been in the live class, but to get that mental part straight for $197, I think you owe it to yourself. If you have no other requests for a particular commodity chart, I'll go straight to the S&P and the NASDAQ. Let's look at the NASDAQ I always have the NASDAQ. These are the 7 charts that I look for. And in our loaded gun, I look for a particular signal. And so I'm looking for, here's one coming up, looks like in the short crude, which I really love. But let's look at the NASDAQ, which would be here. And this is the 5-minute chart. Let's again look at the daily first to give us the undertow, okay, to help us with position sizing. Now I drew these lines a couple of days ago because I felt that, whenever I see a channel like this being built, these kinds of, this is not a flag, but they call this a pennant. These kinds of pennants generally are continuation pennants. Now, while they're pennants, they tend to, I sound very religious, pennants. They tend to stay within the range. So, here is this is something very interesting. So I'd be glad today that I'm looking at this, because if we have a strong day today, I would be looking back and see if we had a breakout here, especially if we take out this area here, because that would lead me to believe that this pennant is breaking up and therefore we need to favor the long positions in our shorter term trading. And when I say favorite, I said instead of taking on maybe 2 contracts or maybe taking on 6 micro contracts, maybe I'll take 8 micro contracts. I'm going to bump that a little bit when I've looked at the daily and I'm favoring. It's a technique I think that you really should consider. If you were to draw this line here, you would see the breakdown here. Let's draw it real fast, just to show you how I look at things and how professional traders look at things. Let's make it a ray. So if I looked at this here, I'm looking here at a sideways movement. Sometimes these lines can be a bit arbitrary to connect. I like connecting all that matter to me, and I would also be connecting here. So you're seeing that either way we've broken out in the sideways pattern since we broke out of this one and this one. So we're accumulating here for our next run, and I'm assuming, and it's most likely that the run is high. I'm not seeing anything from the RSI to help me out, as we have we're near the same velocity, motivation, momentum in this trade as we seem to be descending. The price is descending, but this sideways action with a drifting higher price tells me that we may be moving a bit higher. So again, it's a long chart, long-term bullish chart. You don't want to fight it. You're going to tend to fight it here, but I would be sticking with favoring slightly the long-term trade. So instead of 5 micros, maybe I'll take 6, but I'm not, unless I see a very strong signal in the day area, of which this was one of them right here. Unbelievable, beautiful. Oh, I want to say something about these. If you can find a way to stay in these. Now, I'm not talking about right after a report, because these can be detrimental to your health. But I'm talking about the larger the bar, the more likely you are to get some follow through. What that means to me is that what likely you are to get a scalp out of it. Okay, so in the Nasdaq, listen, we're looking at a chart that's that's very bullish. You can see the influence of the sideways pattern that we've seen in the daily chart. So I would trade this according to what I see in the short-term chart. Okay. So I will now request another chart, unless you want me to choose one. Again, I want you to consider going to thedisciplinedtrader.com/Excel, which is going to straighten out your head. None of this makes any sense if you keep getting in your own way. Okay. The Disciplined Trader is really the only firm that first and foremost is a firm for your mental well-being. And secondly, and almost as important, is having a valuable trading plan. I've written several books on trading plans as well as industry papers. So I know trading plans. I've run one of the largest option firms in the country, where my job was to review the trading plans of traders and advise. I know trading plans, but I also know they are worthless without the mental and emotional strength to run them. So please put $197 out for your own well-being, trading well-being. And this is one of the best courses that we offer. It's a $997 course. And I'm giving you the full recordings of that course. You can take it at your own time. There are specific avenues in that course. If you're somebody that has a problem with patience, you got to have the action, and you want to develop more patience to wait for the 8+ triggers. Zoom in on that area of the course. If you're somebody who seems to revenge trade, you have a couple of losses, you want to get them back now, and you're leaning forward. You don't want to be like that. You want to let the trade come to you. So there's a meditation in there, and maybe an EFT training. We have them both. Won't describe when they are, but it's advanced, fast application stuff. When I say meditation, I mean 8 minutes. When I say EFT training, which is done right on the video, right on your computer. You just follow along. I'm talking about 5 minutes, so I'm not talking about a lot of work on your time to get your head straight. So if you've never done anything for your mentality, go to that page and do something for yourself, so you'll have it in your back pocket. You'll have lifetime access to the material. Okay, so let's take a look at one more. If I have time, we've got about 3 minutes left. I'm going to look at the chat, and if we don't have anybody want to take a look at a futures chart, and I will help you out there. Marmara, don't know what that is, but sounds like Mara. Well, it sounds like a stock, which is not what I'm talking about here. We're talking about futures contracts, but I do know a very beautiful woman named Mara, so thank you for remembering her. She's not passed away. Sounds like she's a terrific gal. Let me look at some of the crude oil. Crude oil I like for day traders because they tend to move quickly. They tend to, when they move, they take a run. They go. Look at how we're moving sideways to the 8 here, and then take the run. Okay, and look at how we've hugged the north side of this all the way. This is a trade that you probably should have had if you were with me. Yeah, I know you should have. It's another trade you would have had. Here's another trade you would have had. Another trade that you would have had your scalp. Again, here is something where you have. I don't know why I keep changing that color instead of removing it. We have here something that is a very bold move that I love this kind of loaded gun trigger. The problem is it's in an up trade, so you're limited to it. So if I were to draw this limiting line, I'm always looking for a place to take my scalp, to take that. That's not what I'm looking for. Let's go with the Ray. You can call me Ray. So you're looking at something here. Okay, so if I do this line, and I like this trigger, which I really do, I have a very low expectation for where it could go. Okay, I'd have to decide whether it's worth this risk or the risk to the other side of the 8 to get a short profit here. And you know, I believe that it would be for a minor number of contracts. I would take my minimum contract. It's so strong here at this level here, as we've tested this low and succeeded with draining those that were short. Looks like we may have a little run up, but you never know because you have resistance. But the distance here may be enough for a scalp. So I would be looking here again in the crude oil. Let's take a look at the daily to give us that direction. We should have done this first. Well, it looks to me like we could probably go in any direction, although the dominant direction, of course, in the short term looks pretty decidedly negative. So I would not be shy about taking positive long trades or short trades here. We seem to be getting a turn here. Everything looks consistent in the RSI, so I'm not getting any help when I analyze price. Okay, well, that is all I have to say. Please do take advantage of the mental game. If you're not doing your mental work, it's not going to happen for you. You can do all the great trading that you want. So that's my main, in the chat was just listed my main email address, or not my URL, but go to thedisciplinedtrader.com/Excel and spend $197 on yourself for the best thing that you can do for yourself. Okay, that is it. I am going to stop my share. I'm going to officially say goodbye and welcome Vince, our next performer.